Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Today, we're going to do a deep product dive into our debt service coverage ratio program. I'll introduce our subject matter experts here in about another minute. We'll let everyone start logging in. I think we've got great attendance for today, so I'm excited. This is going to be recorded. We will. This is very interactive, so put your questions in the queue, and if we don't get to your question today, we will definitely have your account executive reach out to you and make sure your questions get answered. So hopefully everyone's holiday season is off to a great start. Everyone's hopefully finishing the year strong and has their plan to increase their business in 2024. So give it about another 30 seconds. Still some people logging in. Thank you today for joining us again. My name is Jeanmonod, a Regional VP of Sales here at Angel Oak Mortgage Solutions. We've been doing these product deep dives since September 2020. So we've been really the leader in these webinars. So today we have two great account executives, and I'm going to introduce Kim Gilder. Kim, please introduce yourself and give us a little background.
Hi, I'm Kim Gilder. I'm the account executive that handles the Richmond, Virginia area. I especially love the DSCR program, so I'm very excited to be here as one of the presenters. I do quite a bit of them, so that's it.
Yeah, I know you're a webinar machine, Kim. I know that. So, and also a great account executive with us, Chris Taylor. Please introduce yourself, Chris.
Hi, I'm Chris Taylor. I'm in Colorado, Denver, and been with Angel Oak about 8 years, and just really from when we started the whole thing.
Yeah, Chris, I remember you and I at some of our sales conferences early on, and it's been a treat. So
it's been it's been a fun ride, and it's a great business to be in, the non-QM side of mortgages. So happy to be here.
Yeah, and Chris and Kim, thank you for joining us and taking time out of your day, and thank you everyone on this webinar for joining us and for your, participation and wanting to know more about the debt service coverage ratio program. So, but before we get into this, we're going to launch a poll here, and the question on the poll is: who has originated a non-QM debt service coverage ratio specific? Who's originated a debt service coverage ratio program in 2023. So our last 12 months, which we're in the last month anyway. So while that's going on, just some stats here. I think 44% of investment properties are owned by, I believe it's our single family homes, and 70% of those are actually owned by individuals. So let's see what our poll results are. Wow, and this has kind of been similar to all year. 72% of you, thank you for participating, 72% of you have not originated a debt service coverage ratio loan in the last 12 months, which that's great. That's why you guys are all on this call. Chris and Kim are gonna basically tell you how you can originate a debt service coverage ratio loan, hopefully for 2024. These are really easy loans. I know Chris talks about it a lot. Kim talks about it. These are really easy to originate loans. So everything we're going to do today is right on our website. So we're gonna show you highlights of the program. We're going to answer your questions. We're also going to show you a little bit about our foreign national program, and then we're going to get into how to market this program, not only just debt service coverage ratio, but we're also going to show you all the other great marketing tools we have for you. As our website says, solutions for underserved borrowers. So let's get into it right here. So Chris, let's go to the highlights of the programs here. We call it our debt service coverage ratio program, but it's also our investor cash flow. That's what we refer to it internally. So Chris, give us some of our highlights of the program, please.
Sure, and just so for those who don't know what a debt service coverage loan is, it's a loan where we don't look at the debt to income ratio of the borrower. We're looking at the cash flow of the subject property. So for example, if the mortgage payment's $1,000 and the rent's $1,000, that ratio is a 1 ratio, which is kind of an industry standard. And that's how we underwrite the file. Now we can do this loan up to $3 million. We can have a property in an LLC. We can have no limit basically on the number of properties. So if you have investors that have 20 properties, we can do a debt service coverage ratio on a handful of those. It's a 30-year fixed loan. We offer an interest-only program. It's available for non-mortgable condos, condotels, foreign nationals. It's a really flexible loan product. It also is allowed now for those of you who are not licensed in specific states. We have 13 states available now where you can originate a DSCR loan without a license. So that's really helpful for a lot of people that need to expand their market. Lately, what I'm seeing, just real quick, is we're seeing loans on condotels, 4 units, and properties that that are typically cash flowing. But one of the great things that we have at Angel Oak is we allow less than a 1 ratio for debt service coverage ratio. So if you're in a situation, we can go to a negative ratio or a 0.5, for example, ratio. So it's a real flexible product. Again, we don't look at the debt to income ratio. We're specifically looking at an investment property, and the borrower has to own an owner-occupied property. That's probably one of the most important criteria of the product. So.
Yeah, Chris, but I've seen us get exceptions on that, right?
Yeah,
so, like a lot of the things we talk about for everyone on here, Kim does it, Chris does it, all of our great account executives across the country, they know what kind of loans Angel Oak likes, and they're really good at getting exceptions, and that's because the experience that they have, peeling back question after question and saying, you know what, I think we've got a deal there. So about 30% of the deals we close don't meet our guidelines because of people like Kim and Chris, because they know what they're doing, and as seasoned as we all are here at Angel Oak, they know how to get those deals done. So,
and I'll say that one thing that I think we really have one of the strongest positions in the market where we can give you a pre-approval and stand by that. And if we need an exception, we can do that before it goes to underwriting so that you have a loan.
Yeah. So Brian's asking a question. Brian, if we can close these loans, they're really, the biggest thing is just waiting on the appraisal and making sure the property cash flows. But Brian asked a great question. We close these in less than 30 days, so obviously we've got some holidays coming up, but I feel confident saying less than 30 days. So closing these loans. Chris, anything else on the highlights here that you want to share, or?
I'll just say that, again, what John said, a lot of these are really boiling down to the appraisal and, what the rent is going to look like. So on a refinance, we typically look at the actual rent versus a purchase where we look at the rent schedule. That's an important piece of this. So, if you have good rents on a refinance, we can take those, which is really good.
Yeah, so part of our deep dive, we're going to get to Kim here because, part of our deep dive is Kim's going to talk about the loan application, what we want to see on it, what you don't want to see, Kim, right? And so Kim, get into what we want to see as far as on the loan application. And we're going to get to a lot of these great questions coming in, so keep them coming. We will get them answered. Go ahead, Kim.
Thank you, John. So our 1003 is actually pretty simple. You're going to complete the borrower's information. We do not want to see any employment or any income on the 1003. Yes, write that down. No employment, no income. Usually when I say that, people don't believe me, but we do not want to have any employment or income information on the 1003. Probably the most important things to us on the 1003 is to make sure that any mortgage that comes up on credit is matched to the REO. So if you send in a 1003, they've got 5 mortgages outstanding and we don't know where they're matched up, it causes problems right from the beginning. So make sure that you have those matched up. This isn't something that's in the 1003. But if you know when you're submitting a file in for pre-qualification and you know that it wants to close in an LLC or they have a 1031 exchange they want to use, please make sure that you communicate that to us so that we can make sure that we get everything we need prior to closing to have it set up properly to close.
That's a great point, Kim. Great point. So Chris, Kim went over to 1003. What are you looking for as far as credit report when you get a pre-qual?
So we always want to see at least 2 trade lines for 24 months or 3 trade lines for 12 months. We typically would like to see a mortgage unless the primary residence has been paid off. Our credit score starts at a 680 and it kind of goes up from there. 700 is kind of a benchmark for condo tells or debt service coverage ratio below 1. But in all the bankruptcy seasoning we have is 4 years, and like a foreclosure seasoning as well. But the credit should be decent, should be good.
One of the things that I want to make sure we communicate here is, this sounds like this is for that seasoned investor, right? But it's also for a first-time investor, right? So I just want to make sure that everyone on this call, and this is being recorded, this will go out before end of day tomorrow. So let's jump into a lot of great questions here, Chris and Kim. So Jay's asking, I'll ask this one to you, Chris, first here. Do we make an adjustment for the ratio vacancy?
So if we're using a rent schedule, we give you 100% of the rent.
There you go. That answers that. Jay also has another question here, Kim. Is the ratio requirement higher for interest only?
No. So if we can qualify on the interest only payment, so there's not a higher ratio qualification.
And Kim, go into, if you don't mind, sticking with the interest only theme here, go into what part is interest only, what does it convert to, and so on and so forth.
Okay, so we do offer a 30-year interest only on our DSCR. The first 10 years is an interest only payment, then it goes into a 20-year payback. So when you've got an investor, especially now where the rates are kind of all over the place, it gives them a 10-year period to have a lower payment to really maximize their cash flow. It's a great opportunity for them.
Yeah, so hopefully, Rick, that answered your question. So Chris, Mike's asking, if the borrower rents their primary but has a history, this goes back to getting exceptions kind of thing, but has a history of owning rental properties, is that something we would consider?
Yeah, of course.
Yeah.
We look at that definitely, especially for exceptions.
Yeah. So just Mike, that's a great question. We get a lot of those. Like you have some people where affordability, whether it's New York, maybe California, somewhere else, and they're buying, and they have a history of owning investment properties in other areas. So that's
and definitely 1031 exchanges. Those are easy to get approved. So.
Yeah. So Chad is asking here, what information do we require to get an approval? So, what Chris and Kim went over, 1003 without any income or job information, the credit report, and Chris, will we do a pre-qual on a TBD?
Yes, of course. That's what our pre-qual system is all about, and we're going to walk through that in a little bit. But we want to give you a solid approval that you can take to the bank. So
yeah, and I want to really emphasize what Chris mentioned earlier too. Kim and Chris and all of our account executives across this country, they do that pre-qual for you up front. And with the experience that they all have, we kind of call it internally here, your pre-qual is your calling card, and we really do respect your referral sources and your borrowers, so much so that if they're not 100% sure about doing that pre-qual, we have a second line of defense here. It's our credit desk where we go and get questions asked. And these pre-quals are pretty easy to do. Kim, how long does it take you, if you've got everything on the 1003 and credit report correct, how long does it take you to do a pre-qual?
2 to 5 minutes, depending on if it's complete. If
Yeah.
it's not complete, I'm calling you.
Yeah. So, and that's really not a joke, because all we're doing is looking at the 1003, right? Making sure the borrower lives where they live, and the credit report, make sure that the trade lines, like Chris said, and we're off and running to the races. It's not like our bank statement program where you have to get the income calculated for you. There's no income on this. This is pretty easy. We have an AE, I think it might be Chris Barker in one of the Carolinas. He's like, this is a bulletproof. This is a pretty bulletproof loan. So anyway, does Angel Oak allow for short-term rentals, Chris, like
Yes.
Airbnb?
We do allow short-term rentals, and if it's a purchase, we look for the short-term rent to appear on the rent schedule. If it's a refinance, we will ask for recent short-term rental rent to calculate the ratio. And on a short-term rental, we typically want a one ratio or better.
Yeah, so Kim, I'm going to pull up here, we obviously have a debt service loan calculator for you here. I'll show it quickly here. It's available to you. We also have our second lien blended rate calculator too. But let's talk about the debt service coverage ratio. Kim, can you just kind of go over these here?
Yes. So again, we have 3 different levels of debt service. Primarily, the best qualification is to have a 1-to-1 ratio. That's going to give you the best LTVs, the best rates, et cetera. But again, as Chris said, if the rate's 1,100 and, the rent's 11, the PITI is 1,000 and the rent's higher, you're passing that 1-to-1 ratio. We have a second bucket, which is an 80-to-1. That generally comes at a 75 LTV. Again, we can do it. It's going to be based off the 1007 report on your appraisal. And then if it does not cash flow at all, we have an option to go the no DSCR. Again, as Chris said earlier, the lower DSCR and the no DSCR are going to require a higher credit score of 700 or greater.
So hopefully, Lisa, that answered your question about how low below the 1-to-1 ratio will go. So, and then Chris, Rhonda's asking here, so we'll go up to an 80% LTV. Is that predicated on credit score, property type? If you don't mind jumping into a few of those buckets there, Chris.
Well, the primary criteria on that is we have to have a 1 ratio or better to get to 80%, and it's a purchase, not a cash out. And it typically has to be on a single family residence to get to 1 or better. We are actually allowing them too on more than 1 unit, so up to 4 units. We can do that now.
Yeah, and John, to confirm, John, this is me, John, answering your question. Yes, we use 100% of the rent comp analysis on that. Chris mentioned that earlier on that 1007. So, Chris, I guess maybe ask a little bit, like, when do we use the rent comp analysis, and when will we use maybe a rent already in place, so to speak?
Always on a refinance, we'll use the actual rents. There's a little caveat. I think if we have long-term rent, we can actually use the rent schedule in some cases, but typically we're going to use the actual rent that's coming in, and then we're going to always use the rent schedule on a purchase.
A lot of great questions.
I do get that question asked a lot, is will you use the existing rent on a purchase? And no, we would use the rent schedule.
Right. And Kim, great question here about reserves. What do we require for reserves? And that's, I do want to share with, before you get into that, that's usually one of the biggest exceptions we do get granted. So.
Yeah, as a standard, we require 6 months reserves on our DSCR purchases. But again, we want to make loans that make sense. So if you're coming up a little bit short, all you have to do is ask, and we can request an exception on the DSCR. Can't guarantee it'll all get done. It really depends on the overall look of the investor. But when it makes sense, we're here to make loans that make sense.
Yeah, and I think that goes back to what Chris was mentioning about the loan application, right? We don't want job information, we don't want income information, but it helps us get exceptions when you list all the assets that they
Mhm.
do have there. And Kim, is the 6 months reserved on, what if you have a professional investor out there that has 10 other properties, or are we asking for reserves on all those other properties?
No, we're only looking specifically for the subject property. We do not care about any of the other properties in terms of having reserves. And this is actually kind of a good segue. The DSCR program is phenomenal for your investors because if they own a property free and clear and they want to cash out on that property and use that equity to purchase another property or another two properties, we actually have it set up that the loans get underwritten by the same underwriter, so you don't have different conditions. We close them together. We really got this down to a system when it comes in like with an investor with multiple properties. So please, cash out on the properties that they have equity in and continue building their portfolio. There's a lot of ways to bend this program and make it work for your investors.
Yeah, Ken, that's a great point, and it was a great segue. Also, when you have, that professional investor, and again, I want to remind everyone, this is also for a first-time investor, but you have that professional investor. What's the greatest way to accumulate wealth in this country? It is through real estate, and usually when you have that person doing a cash out on investment property, they're usually a multi-pack, right? It's two, maybe three, even up to 5 loans. I know one of our AEs in the Tampa St. Pete, she had a 10-pack of borrowers that had kind of another way to market yourself. They had hard money on these properties, so they cashed out of hard money and then went out and bought some more investment properties. Chris, what about, do we allow gift funds on this DSCR program?
Yes, we're actually allowing gift funds now,
Yeah.
which is great.
Yeah.
So the borrower has to always have 10% of their own money into the loan.
Yeah. Yeah, Kevin's asking about rates. Kevin, we're going to show you a great tool we have available on our website that we'll be able to share with you how to go about it.
And can I bring up, John, about rates that the scenarios I'm seeing these days, our rates are as close to conforming loans as I've ever seen.
Yeah.
And if not better in some cases. So you don't have to put up with all the headaches of a full doc loan, with a DSCR, it's going to go a lot quicker and the rate might actually be more competitive. So.
Yeah, Ruben, I know exactly who you work for and I know who your rep is. So at the end of this, I'm going to type in my email address and phone number. I'll get you in touch with your rep. So Ruben, hopefully we'll get you that information pretty soon here. Kim, talk about prepayment penalties.
Yes. So we have prepayment penalties on all of our DSCRs unless your state does not allow it. What's great about the prepayment penalty is it allows you to structure it based on your investor's need. So our standard is a 3-year prepayment penalty. You can buy it down to 2 years, you can buy it down to 1, or if you know that your investor is going to retain this property long term, they're happy with the rate, it's competitive, we actually allow a 4-year prepayment penalty, which will actually give it gives the best rate on the DSCR.
Yeah, so I just want to clarify because Jennifer's asking if they're renting a home and they want to purchase an investment property. It has to make sense. I just want to make sure we're clear on that. And if they have other rental properties, if they're renting a home today and this is going to be their first investment property, probably not going to fly in that scenario. So, but keep the questions coming. Let me see what else we got. So Chris, this is a great question. So what's the max LTV on a non-warrantable condo?
70, well, I was going to say 75, but actually I think we could do 80 if it's just minor issues. But I think so. But
yeah, so yeah, we don't have a decrease in LTV due to non-warrantable, right? Yeah. So that's there. And Lisa, yes, reserves as Kim mentioned, but a little bit more detail. can reserves be in an IRA or a 401k?
We allow non-liquid monies for reserves.
Yep. And right now, all of our rates are 30-year fixed. And again, we're going to get to our quick quote. I know we're 25 minutes past the top of the hour. So we're going to pivot a little bit here. Kim, take us through some highlights, because underneath this debt service coverage ratio on our matrix, not that you guys need to know that, but on our matrix is where we do foreign national loans also. So, and they qualify basically also on how the property is going to cash flow. So I'm going to go back here. I'm going to move a few boxes around here. Sorry. And go over, Kim, go over some of the highlights of the foreign national program.
Yes, so we do allow a foreign national program. It's up to a 70 LTV. Where I stated before about needing like the 1003 and credit for pre-qualification, the major differences on a foreign national is the 1003 has to have a foreign address as their address. And we don't use a credit report to qualify. So not only is it no employment, no income, we're not even looking at credit. The keys to this program really are they have to have 12 months reserves. It can't be in a country that's on our sanctions list, and that they have to have an eligible visa to come in. But again, if you've got a foreign national who's got a kid in college and they want to buy their kid a condo, they can do it under this program. So, there's a lot of different ways that this comes into play. We have a lot of Canadians buying properties in Florida and South Carolina. They don't even need a visa to enter the country. So, there's a lot of different ways that you can bend this program to help those borrowers coming in.
Yeah, Kim, great points. And with all this geopolitical strife around the world, and Kim mentioned this, and I'm going to dive into it a little bit more, is they're sending their children here to study in the U.S. And if you go around some of these larger universities and start to market for that foreign national, they want to send their child here because they also want to, instead of throwing rent away in a dorm, they're buying them a house or a condo. So it's a great program. And we're starting to see a little bit of an uptick. And I think that has to do with a lot of stuff going on in the world today. So I do want to give a shout out. There's an old friend on here, Stephen W. I won't say his last name, but you both know him too. So, but shout out, Stephen. Hope you are well. So, so that's really our foreign national. Again, resides underneath the debt service coverage ratio. Think about marketing yourself outside your normal channels here. And we're going to get to our pricing tool, and then we're going to go to our marketing. So I think I had Chris, you're going to take me through. I'm going to go back to our homepage so we can show people how to get to our quick quote tool. So go ahead, Chris.
So quick quote we've had for, gosh, since I've even been at Angel Oak. It's such a great tool. You don't have to log in. So it's just, you go to our website, make one click, and you're at our quick quote, which tells you pretty much everything you need to know about a loan program with Angel Oak. And the pricing is tied to our pricing engine when you register a loan. So it's accurate, and it'll tell you everything you need to know on pricing. But basically, we're going to put in the lien type. We now have a second lien product, by the way, not DSCR, but we do have that. So you wanted to try the first lien option. And then the state. So this state is going to tell you whether or not you can actually originate the loan if you are licensed or not. And then we're going to want to know the housing history. Typically 0 times 30 is what you're going to put in there. Property type, 1 unit, which would be a single family purchase. The income documentation is where you actually shift this to a DSCR. So you click on DSCR, and then the active state, if you're licensed in the state or not. So in Colorado, you could actually be non-licensed and do a loan in Colorado.
Yeah, Chris, you mentioned it, Chris, when we went over the highlights. There's 10 states that we allow you as an originator allow you as an originator to close loans if you're not licensed in that state, and that's also on the website. So just, yeah, sorry, Chris, just wanted to.
No problem. And then we want to know the DSCR approximate ratio. So typically you want to start out with a 1 ratio, unless you actually know. A lot of people do call me and they have an appraisal and they already know the ratio, so they'll plug that in right here. And then the next phase would be with the prepayment penalty. We typically have a 3 years, our standard prepay. We do allow a 4-year prepay. For those of you that are contemplating the prepay, remember prepayment penalties are pretty expensive. So if they really think they're going to pay it off less than 3 years, I always recommend to do a 2 or a 1 year prepay. It's pretty costly to do no prepay. But anyway, if you can plug the state in, then page down, you're going to see the overall basic price, investor cash flow program. You know you have a program there. And then we're going to click on view rates to see what type of pricing and how that's paid out. For those of you who have comp plans, you can see in this particular case, it's 8 3/8 is at a par rate. And we actually, can pay lender paid pricing on something like this. So you can see, I mean, that's a pretty competitive rate for an investment program, investment product.
Yeah, especially if you're not providing any income or job information, right? It's
Right.
Really competitive. So Chris, we've talked a little bit about getting us a 1003, getting us a pre-qual, getting us a credit report. So let's take them through on how to do so go ahead.
Yeah. So you're going to select a rate. Keep in mind, you're not locking your rate. This is just for purposes of pre-qualification, you're going to select the rate, select that option, and then that's going to take you to the next step. Now you're going to actually upload your MISMO file, 3.4. If you have that handy, drag that over and drop that in there and then click next. You can actually, if you don't have it, you can click next as well. The 2 things we have to have though are a PDF of your 1003 and the credit report. Plug in your company, your name, your NMLS number, all that pertinent information, your email address, and then you're going to drag and drop the 1003 credit, 1008 if you have it. Any additional information, maybe you have an appraisal, for example, you can drop that into the additional section. And then at the bottom, and then the credit history, if there's a bankruptcy or discharge date that you know about. At the end of all that, you're going to click submit. And then the file is going to come right to us, the AE, to start with. We're going to jump on that file right away for you. In most cases with DSCR loans, we can approve them really quickly for you, unless we need some type of an exception.
Yeah, Chris, like Kim said earlier, it's a pretty easy pre-qual. It's the 1003, as long as it's filled out correctly, the credit report, and their assets, and we're off and running and getting approved. And I want to make sure everyone hears this, that we will do this on a TBD. So, but if there's anything unique about that property, please let us know at that pre-qual stage, because as Chris has mentioned and Kim has mentioned, we get exceptions and we get them up front because we know how valuable your referral sources are and your borrowers are. So, anything.
Yeah, and one exception that I've done recently, because I'm in Colorado, is a rural property. That was actually a short-term rental. So we used to never be able to do a rural property, and now in some cases we can.
So this you don't have to be approved with Angel Oak. Obviously, it's better that you are approved with Angel Oak to do a pre-qual. But one of the things we don't want is wait till they find a property. Get approved with this up front. Don't it doesn't cost you anything, and it saves before everyone's hair gets on fire because the loan couldn't close somewhere else. So it's really beneficial to get approved up front before you start working with that borrower at that time. So. Kim, this is probably your favorite part of our website. So this part, you do have to be approved to work with Angel Oak because we do require you to have login credentials. So Kim, I'm gonna hopefully get us logged in and not have a user error message.
Well, while you're doing that, I'll talk a little bit about where to find investors. So one of the best places to find investors is your realtors. There's a lot of realtors who are investors, so they actually turn out to be your best investor buyers. Another one is if you have access to property managers. A lot of times they're managing huge portfolios. Great people to get in with in terms of getting those investor referrals over under the DSCR program. So what John's doing now is he's logging into our marketing portal, and we're going to go over like the flyer that we have available for this. So when you're ready.
Yep.
Okay.
Where is that flyer? Hold on. Up here. No. There we go. Sorry.
No worries. So our marketing portal is set up just for you. You will not see Angel Oak's name anywhere on here. You'll be able to drop in your own company's name, your photo, your information, you know, save it to your desktop. So if a realtor calls, you can send it out on your email as an attachment. You can hand it out when you're going into a realtor's office. And what's great is once you have all of your information set up, I mean, you can actually drop down and change it if you wanted to do a bank statement program, because we allow a bank statement program for investors, you know, full doc for investors. There's a lot of different ways to do this, but all of these flyers are available to you and they are free. We also have social media posts that you can use. We have whiteboards that you can use for presentations, but use your account executive. I probably do at least 1 or 2 realtor presentations a month for my loan officers. Basically, again, we're not talking about Angel Oak. We're selling you and your company and your ability to capture these borrowers. So, you know, feel free to invite us to do this for you as the experts. We're happy to help you bring in this business.
Yeah, Kim, you know, and I know you do a lot of these, Kim, and you're great at it. And, you know, but we don't expect you as a loan officer to know what we know, what Chris knows, what Kim knows. So use Chris, use Kim, use any of our account executives, because they go in there, and I jokingly say we go in there like we're in the witness protection program. We're not wearing an Angel Oak badge, or I'm not handing out cards. You know, I'm going, you know, Jay asked a lot of questions. I'll use Jay as an example. Like Jay, if Jay invited me to do a realtor presentation with him, I would start my presentation at, I'm just one of Jay's investors. Jay has access to all other investors, but we're going to talk about the programs we as an investor provide to Jay and to your clients, and that's it. Everything's driven about Jay. So it's really a powerful presentation. I'll throw out some statistics here. 9% of the loans we close under our bank statement program are actually realtors. So if you get 12 realtors in a room, the odds are you're probably going to close one of their loans, and they love this debt service coverage ratio program. So it's a real powerful presentation. 72% of you who participated in the poll have not closed a debt service coverage ratio loan in the last 12 months. These are really easy loans to close, and Kim gave you some really great tidbits on where you can try to market these people, whether it's for the debt service coverage or for the foreign national. You know, hard money lenders are another one to really go off and partner with. So, you know, Chris, anything else? I know you're a big marketing guy. Anything else to add to this? You know, we serve an underserved borrower, but I truly believe this is probably one of the most underutilized parts of our website, and it baffles me so many times that it's just crazy. We've done the work for you. Our great marketing department has done this. You don't have to rethink the wheel here.
Yeah, I mean, I would just say that the majority of investment property owners don't know they qualify for this program. They think they need to submit their tax returns and get qualified. So now more than ever, the rates are awesome compared to conforming loans. You can go out and, you know, market to these people, and most of them are self-employed. So, you know, when times are slow right now, this is a great way to get to know self-employed borrowers, investment property owners. You know, you can reach out to property management companies. it's a good way to get in touch with property owners who don't qualify.
I'm going to throw out some stats here, Chris. You know, we're still good on time here, but a couple of stats that, you know, think about creating your own cash out refi boom here. You know, there's let me throw out some stats from 2019. The average home has appreciated. This is across the country, 47.5%. So look at all the equity that people have. Investors also, not just primary owners, investments. So, you know, that's a big stat. You know, 40% of the homes today are owned, and from 2022 are owned outright. 63% of a mortgage between 2.5%, 4%, and 6 out of 7, 85% have a rate below 6%. So two things. One, there's a ton of equity out there, right? And you saw what some of these rates are. These rates are, I think, what do we have? Some in the 7s, some in the 8s there, Chris and Kim. And then the other thing, you know, there's a lot of debt out there too. You know, last year, consumers paid $120 billion in credit card fees and interest on credit card. And credit cards are over $1 trillion right now. So, you know, I'm going to put a shameless plug in. If you're not going to go out and market this debt service coverage ratio, and we know how many people have lower rates, think about a closed-end second loan. You know, they're really, and we have, that's another calculator we have out there, the blended rate calculators out there for you on our website. So, and I've done a lot of talking here. Kim, anything else to add here?
No, again, just to kind of go on what I said before and what Chris said, property managers are key. I did a presentation. The property manager actually managed for 103 property owners. So he was very, like, you want to talk about a deep dive. And what was great is the loan officer invited me to this call. He got all the referrals in. I mean, and I think that we closed maybe 4 or 5 loans in the first 30 days, just because this property manager, he wants to grow his portfolio too, to be able to train him how to talk to his investors to get equity out of this property to invest in another property. I mean, he was happy.
Yeah, that's a great story, Kim. I love that. That's just, you know, guys, who wouldn't want 3 or 4 loans in the first 30 days, right? My gosh, I know a lot of us would, you know. So thank you, Kim. Anything else in closing?
No, just don't be afraid to do this. I think that the hardest part about doing something like this, especially for the first time, is the fear factor. You absolutely have nothing to be afraid of. It's going to be one of the easiest loans that you will ever originate, and you have experts in the field to guide you through it. So take the fear factor off and just do it.
That's awesome. Chris, anything else regarding marketing or closing?
You know, just a little bit of trivia on this product. When we all came out of the financial crisis, the only loans that were actually performing were the ones that were cash flowing. And that's how this product actually was invented or reinvented. And so all I can say is that to investors, to realtors, you know, if the property is cash flowing, it's going to be a great investment long term. And this is such a good loan to get started for people that want to, you know, invest their money. They don't want to invest in the stock market. They don't know what to do with it. To buy investment properties that cash flow, which so many do, this is a great way to get into the real estate market.
Yeah, Chris, Kim, you know, and I think what Kim said, the fear factor, right? You know, you can see the subject matter experts we have just on this call, let alone across the country. I mean, they are the best in the business. And I'll do another marketing thing out there. We have an AE here in the Dallas-Fort Worth area who just Googled investment clubs, real estate investment clubs. And I think these 10 or 12 popped up. So to Kim's point, you know, that's a great way to get started, you know, and don't be afraid, because you know you have a subject matter expert right behind you who's willing to hold your hand throughout that entire process. So anyway, Kim, Chris, I really appreciate you guys taking the time out of your busy days too to educate and inform, you know, everyone who is on this call. So with that, we do ask for a survey at the end of this. So if you don't mind spending a minute to just give us some feedback on things we can do better, because we're always looking to do and share information in a better way. Our next webinar is not till January, and it's going to be similar to what Kim was talking about, how to find these type of non-QM borrowers. So we look forward to you hopefully jumping on that call. We'll send out an email to everyone. This was recorded. We will get this out before end of day tomorrow. For all of you who have worked with Angel Oak, we really do appreciate your business. For those who haven't, just by seeing the subject matter experts we have here, we will help you close more loans. And everyone here on this call or then in this recording, we wish you a safe, happy holiday season and look forward to a very, very successful 2024. So thank you very much. Everyone have a great, wonderful rest of your year.
Thank you.